the production of debt and money by central banks, the hitting of zero interest rates, the need to produce a lot of debt, and with that debt, the central bank printing the money and buying that debt. That has not happened in this degree since the 30s, and it's a big thing. It has to do with the value of money. I've studied the last 500 years of history in cycles, and these things repeat over and over again. Large wealth gaps with large values gaps at the same time as there's a lot of debt and there's an economic downturn produces conflict and vulnerability, and that will be with us unless the economy is good for most people. Most people can be productive and effective and benefit.
For a long time, Ray Dalio has warned of the debt supercycle and the impending everything crash, which looks to be bigger than 2008. Interestingly, his words echo those of famous investor Michael Burry. For those that don't know Ray Dalio, he is an extremely famous hedge fund manager and investor with one of the best investing track records of all time. He is also a scholar of economics and history and has been warning of the 70-year debt supercycle that we are coming to the end of. In this video, he speaks on Bitcoin, why he now owns it, as well as the consequences of the out-of-control money printing and inflation. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing. It's free and you can always change your mind.
Yeah, I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk. So yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than a bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk. First of all, there are two types of inflation. There's the supply-demand inflation, when demand is strong enough and it presses up against capacity, like you don't have enough labor, unemployment rates are low, and capacity is low, and then prices go up, and there's that kind of inflation. And then there's a monetary inflation, which comes from the supply of debt being too much so that they produce more of the money, and the holders of those financial assets, particularly bonds, because bonds is just a promise to receive money that the central bank can print, the holders of that then go into those other things. And then what happens is then you just have to follow the money. So you see who gets the money. And then when they get the money, you see what they do with that money. So let's say if you change who gets the money now, because we're going to change that, taxes will change that, other things will change that. That goes then to those other people. So the inflation, the big inflations, the ones that are really most important are not the ones of the supply and the demand. They are the ones like that which followed 1971, my example. Okay, there's not enough money. You put it down, you devalue. In other words, you sever the link. And then with that, then there's a monetary inflation. You go into those other things, and then you have that. So the risk, let's say there's two risks. We will have a hell of a lot of demand because we put all that money in. Cash is all over the place. And even investments, all the investments go up because of so much cash. And how do you find a good investment? There's so much money, and it'll change the amount that is in the hands of individuals and so on. And so now it's in cash, and that'll move on because cash is trash. I'd say that because it'll have that negative real return. So we're going to the real risk. You'll experience more inflation. Right now, a lot of it is in cash, and there'll be a lot more money being produced. But you'll experience that more in that kind of inflation. Things will go up. You could see inflation in houses, inflation in many things is going up, and then you'll start to see probably some labor inflation. If you start to see labor inflation and so on, it'll be a different kind of inflation though. It'll be because we're in a more digital society, there won't be, those things can be produced. That supply of digitalization can be produced without the capacity constraint. But the big monetary inflation is the thing. Where do I store my wealth? Okay, because what happens to the markets is then when you go to those other things, let's say you go to stocks, you go to real estate, you go to other things because they're getting out of that. As those prices rise, like a bond, their future expected returns go down. And as they come closer to the interest rate, so now you've got whatever the interest rates are, it depends on the country, but it comes down, then there's no longer the incentive to buy those things, and you could have trouble. And it becomes very difficult to tighten monetary policy because the whole thing falls apart. Everything's interest rate sensitive. And so the central bank has got to then print that. Then you have negative real returns in stocks and other assets, like we did in the 70s, but the nominal return goes up. That pattern has happened over and over, and I'm just trying to describe the mechanics of it. Right. Watch the total value of Bitcoin right now is a little over $1 trillion. Total value of bonds is about our bonds is U.S. dollar bonds, about $23 trillion, and so on. Not only watch the price, although in Bitcoin's case, the demand follows the price, watch the total values of those things. And as those, plot it on a chart and watch those things and watch the flows, because if you start to see that kind of thing, you could almost see, like the blow off and then that kind of reversal. Right now, just to put it in perspective, some other numbers, like there's a little over $1 trillion in Bitcoin. If for gold, if you take out central bank ownerships, because central banks won't own Bitcoin I don't believe, for various reasons that I can digress in, as an asset. And if you take out jewelry from gold, then you have a bit over $5 trillion. So if you were to look at it now, and you were to say what's a person who wants a diversification of those two things, it's about, like 80-20 right now in the world. So that's something I'd watch too, but I think those things probably are going to rise relative to the bonds, and it would transpire that way. So you want to watch those numbers and see how those go.